Martin Johnson, JMW Insurance Solutions, owner and agent. We handle California, Arizona, and Nevada for personal and business insurance. So, home insurance. As you know, most home insurance rates have increased at least 15%, if not greater. And this is caused by many different things. I'm going to cover those things as we go, because California right now is really in a hurt because there's only so many home insurance carriers that are writing insurance. Then you have the non-admitted market, which is double the premiums from there. And then you got the California Fair Plan and 2 policies and all that good stuff. So how does this all work out, and how did it get to where it's at currently? So home insurance is basically rated in a fashion of tiers. So you have your insurance carrier that you get for your home insurance. The insurance carrier has reinsurance that they use as well. So the home insurance carrier that you deal with is regulated by the California Department of Insurance. The reinsurance market is not regulated nearly the same way. So the reinsurance market gets to raise their rates. So now your insurance carrier has higher rates that they're paying for the reinsurance market, plus the higher rates of claims for water leaks, roof leaks, fire, that kind of thing. So reconstruction costs, maintenance, all of that stuff has gone up as well. So the reinsurance and the cost of living has made the insurance non-profitable. And this is a profitable business. It's what it's designed to be. So they have to in turn raise their rates, but the Department of Insurance has been holding them back for quite some time. Now they're finally getting these adjustments going on. So they also change rates based on zip codes, and they do this to balance their book of business. The best way to describe it is if there are a zip code that you have, that the insurance company has a lot of homes in, and they want to reduce the amount of policies that are growing there, they'll raise the rate over there, but they have to keep the rate balanced, so they have to lower the rate in another zip code or multiple zip codes to offset it. So in that case, they'll pick a zip code that they don't have a lot of business in and they want to write more business in. So that rate will get lowered. The zip code that they want to stop writing in will get increased, and you'll see your renewal rates get increased in those areas as well. That's how the insurance companies kind of keep their rates adjusted based on that number that they have to follow by with the Department of Insurance. Homeowners insurance claims. This is a crazy one, and it kills me every time I bring this up with my wife. She's like, "That's what you pay for insurance." Yeah, it's exactly why you pay for insurance, is you pay for insurance for a catastrophic loss. And you know as well as I know, a catastrophic loss is determined in different ways. What you financially can afford and what you can't financially afford is a catastrophic loss. But not really. But yes, it is. And I'm on the fence with this, and I go back and forth, and because insurance should be insurance and it should be there when you need it. But there's variables to this. So how claims works in the claims process is the more the insurance company pays out in claims, the less profitable they are, obviously. And how do they get to this claims process and go through it from there? So let's break this down. Number one claim in California currently is water losses. We do have a lot of fires. We don't lose a lot of properties when it comes to fires. We lose a lot of acreage, but typically the overwhelming number of homes that burn down doesn't surpass the number of homes that have water losses. Plumbing breaks. Copper plumbing breaks. And if you don't do a due diligence of maintaining it, and I say that loosely, and you know that your copper lines in the concrete or under the foundation are going to break at some point, because they will, and you don't bypass that, you're going to have a water leak. It's just going to happen. And depending on the cost of that water leak, you can afford to do it on your own, or you claim it on insurance. So that's kind of the catch-22. And then there's more to that. The other part of that is insurance claim math. So again, insurance is a profitable business. So when you file a claim, let's just say you file a claim for $2,000, right? You have a $1,000 deductible, the insurance company pays $1,000, all is good. You got your whatever fixed and you're good to go. But now the insurance company turns around and surcharges you, and your rate goes up the next year. In fact, it'll be up for the next 3 years. So they surcharge you for filing a claim for 3 years. So let's just say they surcharge you for $300 a year for 3 years. That's $900. So you paid a $1,000 deductible, they paid $1,000, and then you paid $900 over 3 years. The insurance company ended up netting out $1,000 or $100. That's it. I was gonna do wrong math there. But $100. So you filed a claim so they could get most of their money back. It's just not, it's not right, but it needs to be known. So you got to make those decisions as well. I like $2,500 deductibles because you're less likely to file a smaller claim. Because I like them doesn't mean that we have to use them. You have to use a deductible that's right for you and your family and your budget. I've seen customers use $5,000 deductibles. I've had customers recently use $10,000 deductibles. So they're going to pay for everything on their own. It's cost effective for them, and they're kind of going from there. They're using insurance for a complete total loss. If it burns to the ground, gets demolished, whatever, that's what they're going to use their insurance for. Is that the right answer for everybody? Absolutely not. It's not. But you could talk to your insurance agent and they can walk you through this process and how it works. Preventative maintenance on your home is key. I mean, if you have your roof looked at on an annual basis, I know it's a lot to do, just another step, and it's just more money, but it's way better than having your $20,000 roof replaced and having to bear that cost. So doing stuff like that, having your plumbing checked, put a water leak detecting system on your house. That is amazing, right? Because it'll let your phone know that your water is still running when you have everything turned off. Another way to test it, if you don't want the leak detection system, is you go to your water meter. Make sure all your water's off in your home. Go to the water meter at the curb. If it's spinning, any dial on that thing is spinning, water's going through that meter, which means there's water running somewhere in your house. And that's a great way to understand if you've got a water leak somewhere, and you can catch it before it does a lot of damage. Insurance covers damage, doesn't cover repair. So the repair of the pipe still is on you regardless of the damage it causes. The damage is on the insurance company. Some of the key coverages that you might want to have in a homeowner's policy, obviously dwelling coverage is number one. You want to make sure your home is always insured to 100% of its replacement cost. Now replacement cost fluctuates. Most of the time lately it's been going up and up and up and up. When I started this, I think it was $165 a square foot. We're over $300 a square foot. A custom home is over $500 a square foot. It's gone crazy. And that just adds to your insurance cost across the board. So making sure that your home is insured for 100% of replacement cost is key, because then all the other things in your policy will kick in and be there. Extended coverage, all that kind of stuff. Another one to make sure that you have coverage for is liability. A lot of people oversee liability, and I think liability is the big miss. You know, for $300,000 of liability coverage, it's $30. For $500,000 of liability coverage, it's $40 or $50 a year for that kind of coverage. Now think about it this way. If you had somebody injure themselves on your property and they sue you and your liability coverage is going to kick in, do you want a $100,000 attorney, a $300,000 attorney, or a $500,000 attorney? Because the insurance company's on the hook, and it's a profitable business. So what are they going to send out to make sure that they litigate your case correctly? They're going to send out somebody that knows what they're doing, the more money that they have at risk. It's a great tool to have. It's cost effective, and it happens all the time. Those of you that think your best friend will never sue you on a homeowner's claim, I've seen it more times than I can count on both hands. It's unreal. I don't get it, but it really is. Everybody has medical insurance. It's their right. That's what they can do. You have insurance. That's the process. It's there. It happens. It destroys friendships, I know, but it's insurance. That's the crazy part of it. So other home insurance coverages that I think are great tools to have is you have equipment breakdown. Equipment breakdown is better used in newer homes nowadays, and there's a lot of newer homes or upgraded homes. So your oven is fully electronic and digitized and has all these gadgets. Your stove, same thing. Your refrigerator, all these components that connects to your phone, and you can say good morning to it every day. Whatever that is, all that electronic stuff is plugged into the wall. And if there's a power surge and it shuts out your refrigerator, shuts out your oven, then that coverage right there, equipment breakdown, will help cover those things. And I know earlier I was talking about insurance and claims and that kind of thing, but some of these ovens are $3 grand, $5 grand. You know, it depends. Refrigerators can be, you know, $3,000 to $5,000. Again, I can't dictate everybody's budget. It's not for me to say. My job is to give you the knowledge on that. Service line breakdown. We'll go back to that check in your water meter, right? So that water line runs underground from the water meter that's at the curb all the way to your house. That pipe does break from time to time, and it's not covered under your homeowner's insurance. So you have to repair that pipe, and you think, oh, that's not that big of a deal. Well, they have to dig a hole to get to the pipe. Depending on the route that that pipe is taking, there could be concrete, there could be just dirt, there could be all kinds of things, you know, above it. And getting all that stuff out of the way to repair the pipe and then putting it all back to normal, that would be completely on you unless you had service line coverage. And I always recommend $10,000 of service line coverage. I've talked to a couple of clients that are plumbers. That's what they usually have, is about $10,000 coverage. They're the ones that dig in the hole in their own front yard, but it covers it for them. So they're happy campers. Personal liability. This one's, you know, this one costs some money. It's, you know, service line coverage is not that expensive. Equipment breakdown's not that expensive. Personal liability is more expensive. And here's my rule of thumb of insurance. The more expensive it is for that line item, more likely it's going to happen, or the more claims that they've had. So they're increasing the dollar amounts because they have a higher risk. Personal liability basically is you get in a fight with your neighbor, you push them down, and they hurt themselves, and they go after you, or they sue you. Or you slander them with the neighbors around town, or somebody gets their feelings hurt, or, you know, it's unlimited of what can happen. So that personal coverage is really, really important. Some carriers include it in their liability, some carriers don't. So knowing what you have is really a key thing. Most of the carriers that are available do carry it in the liability. There's just a few that don't. So if you have any questions on your homeowner's insurance, you want to get a second opinion on your insurance, feel free to give me a call, 951-501-2900. Hope all is well. You have a great day.